The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman here, and it's my pleasure to be here Monday through Friday on market days, and it's also my pleasure to be the fourth host of such a fabulous lineup that we have starting at 8 o'clock. Now, I'm doing this remotely, so it might be a little problem. I'm not sure if my charts are showing or not. It doesn't matter. There is so much to discuss here that I'm going to go through all the litany. So the charts are not showing. I'm not sure how we're going to do that. Maybe during the break, I'll be able to just come up and do everything else. Now, back at the ranch, what we're really looking at is this. I'm going to do this orally, but as if it's visual. And I'm going to do it in such a way that I can give you patterns that we always talk about. You know, the arch formation on this, the 14th day of August. And what we're looking at is the Dow starts on the 2nd of February at 17,034, makes a huge arch formation, not a perfect arch formation. There's a little cup on the way, and then it starts on the way down. It goes up until 18,351 in the Dow through the 19th of May, and then it starts on the way down. And on the way down, it has lower highs and lower lows until, using a technique that I've developed called the left side, right side price time match, as well as the Chapman wave inside wedge, we get within less than 100 points of the target that we had on the left side of 17,034. Most importantly about that factor is this, that not only does it coincide with quite important activity that, in a sense, I want to refer to as the stochastic and MACD showing precisely where within the framework of oversold and overbought they are on that test, which was just 3 days ago at 17,125. So within about 90 points away, there is that sharp intraday reversal. I call that something that I refer to going back decades, actually. I remember it back in 1984 very significantly. There was a low that was made in the Dow, and I remember saying everything about what I'm looking at suggests to me that we're looking at an internal low, and that on work that I had done, a residual low should come about within 6 to 8 weeks. Well, as I'm looking at this particular chart, I think that we've made an internal low. I actually don't think it's internal low, even to consider it as an internal low. Why? Because by the third bar after an internal low, if not the second, but by the third, not only are you taking out the left side peaks that were important, in this case, it's all the way back in the 17,600s, but you've got the MACD and stochastic turning around sharply to the upside. Unfortunately, what we've got here is that the stochastic has, in fact, stopped in the 30% area, 36, 37, 38% area. And the MACD, while it's close to turning up, hasn't yet turned up. So that's going to be very important in my work. That's number one. Number two is that the 9-period exponential moving average of 17,471 is, in fact, really becoming even more important. I'd mentioned it as important 2 days ago. I mentioned it was important to my subscribers on my opening call today. And we actually took we had short positions. We've kept some of the sector shorts like the IBB, the NASDAQ biotech sector, kept that short from almost at the top. We've also got the semiconductor index, which we are short via the inversion, the 300% long position, 300% short position. And as a result, what I'm looking at here is that those sectors that yesterday should have been participants in the rally kind of were participants and then they failed. And that's saying to me that under the circumstances, it's telling me a lot of information that says that the tide, the larger tide, as well as the intermediate term tide, is turning down decisively. The short-term trend still has a little internal strength that might have to be usurped. But I can just tell you this, that we wanted to keep those core positions on the short side. We've got one position, I'm not even sure because I haven't been able to check whether it's still on the long side of the Dow that we took yesterday. We took two very small positions. One got stopped out for a bit of a profit, and the other one, I don't know exactly where it is right now, but the Dow is up at this particular point on the 14th of August at 11:11 in the morning. The Dow is up 2 points at 17,410. The S&P is down. In fact, but let me do this with charts so that even though you're not looking at it, and I will get to callers, INDU. So remember, we're doing this visually just in case you aren't able to see. 17,480 is what the Dow needs to climb above. Actually, I'd even say 17,500. It needs to climb and hold in the next 2 days by Tuesday to show us that this residual strength is able to really participate on the upside to get rid of any excess strength, and then we can start down it. And on the downside, a break below yesterday's low of 17,341 would be very negative. On the S&P, and we'll quickly do these indexes. S&P is weak right now. It's down 83 cents to 2,082. 2,088 is the resistance, the 9-period moving resistance. But you know what? If it breaks above yesterday's high of 2,093, let's call it, that'll be positive. But at this point, if it starts to slide underneath 2,078, that's going to say, uh-oh, trouble, trouble, trouble. And I'll talk about weekly charts and monthly charts later. Let me get to the QQQ series. QQQ series is down 27 cents at 110.07. Really does look weak, and that weekly chart is not looking very good. I know that pattern very well. It's speed to the upside that you need. Today should have been really in the 113s, and I would have said, wow, we could retest the old high. This is not good. If we close under the 9 EMA today again, that's going to be, in the weekly chart, that's going to be a negative. Let's go to gold. Gold had some strength. I kind of like the strength a little bit. Today it's down 40 cents at 11.15. It got hit by the 9-period moving average resistance on the weekly chart at 11.28. And I suspect that 11.07 should be the support. But if by any chance there's a sudden perception that maybe gold as a currency of fear is where you want to go, it's going to quickly go to 11.28, 11.30. And we've got a little bit of a long position in the gold index itself. We'll see what happens. Just a small position, kind of a starter position. And I just want to get to the dollar, and then we're going to go to calls. So we've got the DXY. That's the dollar is holding, but it really looks very weak. The weekly chart looks like an H pattern. That's the reason why gold, if it doesn't rally here, that's very weak, because right now it should be moving much nicer to the upside. So watch the dollar. 97 says, it's at 96.42. At 97.30, it says, I'm okay. I'm back on I've healed my sideways move. I'm moving to the upside. But let me tell you, a close under 95.50 in the next 2 days will be quite negative for the dollar. And just quickly, I want to do the TLT, because that's has shown strength. Showing strength holding the 9-period moving average at 123.84, up 17 cents. And I'm going to suggest to you that we're looking at 122.50 as 122.50 to 122 is quite important short-term support. Let's go to our first caller. We've got Ben in Tallahassee, Florida. Ben, how are you? What can I look at for you?
Good. How you doing, Basil?
How are you doing?
Excellent. Thank you.
Good.
Yeah, you touched on it. Gold. I bought the GLD yesterday, closer to the low. I forget the exact number. But I guess my first question is, do you have a peak C in the daily on that?
So, okay, this is going to be very important. So let me go to you're looking at the gold contract itself. I'm looking at the continuous contract.
I'm looking at GLD.
GLD. Okay, that's even better. So the GLD, everybody has the GLD on their systems. I've got a peak C. And the big question is this going to be the move that actually takes the GLD to, let me just see here. It's in peak C. It's holding very well considering the big move that it had. It's making stair-step moves. It says that 106.67, you've got 106.08 as the 9-period exponential moving average support. But, and this is the first time I can actually say it, the stochastics at 85% and the MACD is expanding. And that's the reason why I thought that gold in this particular moment now, I'm not talking about monthly, I'm not even talking about weekly in a sense, I'm talking about the daily as the kickoff, the starter position. If the daily is able to get to, anywhere 108.90, 109.20, I would consider that a very big positive because it's going to help the weekly technical start to at least attempt to cross above 108.27 is the 9-period moving average. And so far, it's at 106.68. Now, in gold, in the old days, 2-3 points on the GLD was nothing. Lately, it's nothing if you're looking at it on the way down. But over this 3-week period, let's call it about almost a month, we're looking at something a little bit different. We're looking at the technical starting to assist. We're looking at some of the gold stocks acting pretty darn well. And we're looking at the GLD at least a holding support over the last 4 or 5 days. On every pullback, it's managed to hold or to climb to a slightly higher high. And if I look at the GDX, which I want to do, because we're looking at gold, the GDX is a slightly different pattern. It's at 1455, and it is the Market Vectors Gold Index. So what I'm looking at here, this is just a single leg A up, and now it's pulling back. So it's a little different pattern because gold itself started its move before the GDX, and then the GDX had a very quick move from the 13s to the 15.5 area. So it's consolidating, but if the GDX starts to slide, my thinking here is that we are still not going to be ready for a decent 3 to 4, even 5-week rally in gold. And that's so far, all I can do is look at the parameters, and I don't know if I'm able to grab the 120-minute chart now. If you've got a moment, I'm going to do that. Let's see the 120-minute chart right there. I think, if I remember, there it is. Okay, now I hadn't finished that. I'd done gold. This is an A, B. It's an A, B, C, pulls back. A, B, C, D, E. I'm going to call it an E for now, just I'm doing it very quickly. Yes, I can see what's happening here. This is a consolidation, and I would not be surprised if if it does have weakness Sunday night into Monday, we're going to be watching that 106.20 to 106 area closely, because I can tell you this, if the gold if GLD starts to break into the 105.50s, this is just another one of those false rallies. So I'm going to just say to you, are you long the GLD?
Yeah, I bought some toward the low yesterday, and hoping to get at least peak D daily, and then that gives me the roadmap to how long I want to hang on to it.
My thinking
so really
is you're correct.
Big question is,
that it should get to the D, and the D would be, folks, if you're listening, D would be 1 penny above 107.91, and 107.92 starts leg D, and then I would raise the stop. So I would just say keep your tight parameters, 106.20. You might not have any choice if it's overnight on Sunday night and it opens very weak on Sunday. I'm looking at it, and I think that gold might hold okay here. So that's what I'm going to recommend.
You got peak
I would not hang around too long if it breaks under 106 for an entire day.
Yep,
but
thank you, Basil.
For leg D. Hope that helps you.
Thank you, Basil.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back, and let's just go through a couple of things here. Let's go through these sectors. The XLF. The XLF is a really important sector, obviously. Why? Because within the context of the market, my suspicion, and it's only a suspicion, I talked about this for quite a while, is that the XLF is going to be the one sector that, even though it could pull back and go back fairly sharply, it could be the sector that actually holds up the best. And we're going to look at the former great sectors like the biotechs and like the healthcare, etc. The semis were terrific, and they've been on a downturn for quite a while. We're going to be looking at this in a different way. I think that when this correction, I'm calling it a correction, is completed, the XLF is up 6 cents right now, 25.13. And most importantly, from the low that it made the other day, which is a low way above the 24.12 low back on the 8th of August, this last move down on 12th of August, went to 24.60. So I say way, I mean, on the chart, it's way. In reality, it's less than half a point. But in fact, what we're looking at is that weekly chart is still holding quite well. The monthly chart is quite good. So there's one sector I'd be looking at as start making your picks. Start looking at these various stocks and say, hey, these are the ones that are most interesting. And some of you do a lot of fundamental work. Cheat fundamentals, very important here, as well as the technicals, because the companies in the financials that have survived the best up until now and have gone through the legislation are most closely have completed all the obligations and are going to be giving out loans much quicker when things come back. If there is a comeback, I hope there is, come the next, towards the end of the year, then we're going to be looking at something different. So the sectors that are weakest, I'm looking at the IBB. How's it doing? Oh my goodness, down 6, down. It's at 360. Thank goodness we kept our core position short from the 393.10 area. There's 7 points from the all-time high. And we've had trades. Even yesterday, we tried along on the long side for a 1 point. It's like a 1% loss. I thought, why not? If the IBB is going to be the sector that rallies, I want to be there. Even though we've got the short position, we can always switch. No, we're out, and we're looking at the downside. This is serious stuff. And this weekly chart, I can't show it to you right now. I'm going to try to come back in the next break. I wasn't able. This break, I'll try to get the charts up. Let me explain it to you. If you've got a 9-period moving average in the weekly, and it's just been this very smooth, squiggly line that goes up all the way to a peak after the Chapman wave to 400.79 the week of the 24th of July, and then starts on its way down. And this is the third week since the high. The week of the high was an ugly week. Now you've got the third week after that bar, that full bar, the bar of April, I think it was. July, August, September, October. How could it be? Oh, it's a weekly chart. What's the matter with it? 24th of July, and it's a weekly chart. So look what's happened. This is testing that down channel that I drew in ages ago. Now what we have, let me show you some. This is a technique. I'll talk it out. You've got a series of higher highs in the IBB, and they make a channel. It goes towards the channel, the repellent, and it does get repelled in that area. I drew a down channel, a potential down channel with a circle, and we're exactly in the circle now. I moved it to the right last week only to be able to show it clearly, but we're right there. And now you've got an up channel that says the IBB could make its way down to the 350 to the 340 area, and that could be within a week, a couple of weeks. If this kind of intensive selling, and this is my guess, that some of the mutual funds are getting out of their positions. And if you look at the monthly chart, nothing. Peak D probably forming in August. MACD turning down, but I haven't got the signal yet. And the stochastic is the one thing that's saying, hey, you might be looking at the chart. Look at me. I'm the innards. I'm the X-ray. I'm the MRI of the patient. And I say that the unbalanced volume has made a PD. The stochastic is making lower right shoulder failure patterns, and the RSI, the little red line right there, for those of you, if you're able to see it, if you have it on your charts, is very negative for the RSI. And I suggest that 345, the 9-period moving average in the monthly chart, will be tested at some point fairly soon. So that's the reason why I've tried to keep for my subscribers this quite negative bias in the different sectors. Now, even more importantly, I did fail to get my subscribers back into the short or the long VIX position. It's a pity, but that's the way it is. It's a terrible instrument, and you've got to handle it with care. I always tell people you've got to be very, very careful the way you use it. And you can't just arbitrarily say, I think I heard someone say something about short, I'm going to buy. You've got to really know your oats. So let's look at the XLV. So the upside is 369 is very strong 9-period exponential moving average resistance. The downside at 357, a close under 357 will be very negative for the IBB. We'll be back right after this break. I'm going to try to repair some of the stuff, see if I can get back on. We'll be back. Thanks for being here, and I'll be back straight after this.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy does his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, we're back, and thank goodness I got the chart up. I should have done that earlier. I was doing a number of things at once. You know, when you're out of the office and you're doing this all remotely, I don't know how John Logan manages to do that, all that stuff everywhere he is. Anyway, so here we go. The XLV is down 33 cents at 74.84. Hey, it's not a big deal. The all-time high was 77.40. Using the techniques that I have, we were able to short just less than a point from the top. But it really, I'm just treating this as a tiptoe, using the technique of the Chapman wave, the preciseness that it can give you at major turns. I'm just trying to use that to say, hey, let's see, because I really want to see what happens on the weekly chart. For instance, the weekly chart last week, after that high that was made the week of the 24th of July at 77.40 on the S&P Select Healthcare Spider Fund, this is fabulous action. It's up above the 9-period moving edge, and then all of a sudden it starts to jibble jab underneath it. And then what do you get? You get a powerful move. The candle that makes the high also turns down and closes sharply, though. That's always a very poor sign. But the very next bar was a terrific week. Didn't make a new high, but it was a great candle. But then the sandwich effect. This, to me, is really important. The sandwich effect of green, red, green, green, red, green, or red, green, red. Those parallel bars, you know, I don't remember who termed it. There was a technique called railroad tracks. This is very much like a railroad track, except it's got the third wire right there in the middle. So this is 3. It's a sandwich effect, I call it. So this is going to be very important. Now, this is, to me, quite key. In the monthly chart, back in July, you made a high of 74.40. In the next month, the high was 77.27. Is this going to be, I've already written it down here, is this going to be a Chapman wave 2-bar reversal? The stochastic's turning down. Sorry, the stochastic's failing. The MACD is turning down. Hasn't crossed negative yet, so we haven't got any signals at all in the monthly chart if you're looking at the price. But if you look at the RSI, it's pulling back. If you're looking at the on-balance volume, it's got a peak. It tried to double top, triple top, and now it's pulling back. So a lot of clues. The weekly chart is going to tell me about the monthly. The daily is going to tell me about the weekly. And already the 120-minute chart has got this arch failure pattern. And this is going to be very important. What happens in the coming week? And I would suggest to you, as I said to my subscribers on my opening call, that the close today is not going to just tell us about the day and what happened this week. It's going to tell us about the parameters to look for next week. So the resistance is at 75.50 to 76.30. A close above that says, oh, mister, what are you thinking? I'm going to just retest the old highs. But a close below this candle of the 73.90 that was made 3 days ago. Look at the beauty of these chart formations. Look at the arch formation. A beautiful left side, right side, 1 day early. And it goes from 73.86 to the peak D, Chapman wave peak D, 77.40 high on the 20th of July. And then what does it do? It comes back down sharply and whoop, a sudden spike up that's residual strength because it wasn't yet ready. It filled the gap. And then whoppo, it comes all the way down. And where does it go to? 73.90. 73.90 is 4 cents away from the left side low bar. I love these patterns. Arch formations. Remember, the market's made up of only 3 patterns. Straight line moves up and down. Look, that's a straight line move right there. But then you get cups which go from the left side and they come all the way down like a semicircle, and they come right back and they test somewhere around the previous left side high bar, or an arch. It goes from a certain level, it makes a loop to the upside, a semicircle upside down, the upper part of it, and it comes back and it tests the other one. That could be a V or a U formation. So that's what you get. And now let's go on. So I did the IBB, I did the XLF, I did the XLV, which is the S&P's healthcare. Now it's going to be very important to go through a couple of stocks, my Dow quartet. Look, GE holding okay, but really not good action. Holding okay on the daily. The weekly is just testing that down channel trend line. This is not great action, but so far it's not really. How can I put it? It's still within a trading boundary. If GE starts to take out 24.70 in the next 4 days or 5 days, I think that the target will be that 200-period moving average of 24.05, and that would be a negative for the market because GE is my bellwether. How many years, decades has it been my bellwether for the Dow, and UTX is my intermediate-term bellwether. Look at UTX. Horrible chart the other day. Tries to rally yesterday. Look at this. Tries to rally. Nothing. It's under the 9-period moving average after gapping down. Stocks that gap down, they don't try to fill the gap. There's something seriously wrong. And you have to wait for a buy signal that really triggers tremendous movement to the upside. At that point, you need price. You need acceleration in UTX at 98.69, up 32 cents. It has to break above the gap high, and that's at 102. No, it's not. It's at 104.95. And within a week of touching that, it can't pull back. It has to actually climb into the break and break all this resistance. We've seen that before on stocks that have gapped down on news, but have internal strength still. And then all of a sudden they repair the damage and they turn into fantastic stocks. I don't see UTX, United Technologies, doing that for a while because this monthly chart, let me try to pull this across here. Yeah, look at that. Look at that. There's the arch formation. You had an exact left side low bar that extended to the right. and you went 97.30 was the low of the week of the 17th of October, of course, last year. And what did we just get to? 96.65. We've broken that. So this is the arch formation that says now you should be seeing strength in the short term that leads to the intermediate term. That's the weekly chart, and that weekly chart, stochastics at 7%. MACD is huge to the downside. Something spectacular has to happen for the market to reverse course, to get GE, UTX, IBM. Let me give you my other one. Yeah, it's IBM. Nothing. These are, I can't believe, nothing in these stocks. And Triple M. And I'm going to go to our next caller. Just let me get Triple M. Nothing. This is serious stuff. I don't like what I'm seeing at all. Regardless of the fact that we have a long, I think we still have a long position in the Dow because there's just enough Dow stocks to rally a little bit more. I'm prepared to switch on a dime. Let's go to Brent in Martinez, California. Brent, how are you?
I'm doing great, Basil. It's Friday. I'm in a good mood. How about you?
I'm good as well. It is Friday, and it's just a beautiful day out here where I am. And you'd like to look at?
Let me just give you my quick take on this stock. It's Silica Holdings. I'm long at $21. I see it seems to be bumping into the 50-day SMA on the daily, and on the weekly it's bumping up to the 9 EMA. And I think, if I'm correct, it's if it closed around this range, it would be a peak A on the weekly and then a peak B on the daily. I just wanted your opinion, please.
So this is very interesting. Can you just remind me again? I've seen the symbol many times before, but I don't remember that holding company. What product? What?
It's silica sand, and it's not just for. I mean, the main area that they seem to be associated with would be for the fracking, but they also use that in a lot of different applications.
Okay.
They manufacture for polymers and just all kinds of different applications within the manufacturing industry. But the main thing that they are associated with is the fracking.
Okay. So as I'm reading it now, unless I'm mistaken, the weekly chart made a perfect peak D. Then it started on its way down. It went under the previous low, and now the technicals are actually, this is a great example of the difference between UTX and this weekly chart, which has the stochastic bouncing off the single digits and at 13%. The MACD is making a much higher low than it was when it made the left side low bar back in, I believe it was the end of last year. Yeah, that was in December of last year, 2271. The next low, it went all the way. This is terrific. It went all the way to 40.17. That was in April, and then it comes back down and it goes to 19.95. So this is definitely, you can't. So let me just show this for the viewers, because this is Technical Friday. This bar is not leg A. Why? Because the bar that makes the low cannot also be the high unless it is at peak D. So that sounds technical. Let me just quickly explain it. See, on this bar here, you can't call this a peak because there isn't a trough. Only on that bar, the second bar after the low of the 31st of July, at 1935, the next bar has a low of round number 21. From now, you can start counting it. And as Brent said perfectly, this is brand new leg A. But it's a gray A. Why is it a gray A? It means it's a gray A because it could fail at any point. We don't have any technicals confirming the rally. The stochastic's not at 80% or more, and it came from a peak D way above. So this is like what I call a retracement failure mode. It's just an explanation. It's not I'm not characterizing it. I'm explaining it, that it's had a sharp pullback, and now it's starting a rally that's starting to look good, but it's just the start of a rally, and it could fail. So, Brent, two things. The monthly chart is horrible, but the 200-period moving average for the first time is starting to act as support before. That was good. Then it came back down, and in July it's testing it, and now it's slightly above it, and that's a good sign. So let's go one step at a time. The daily is in brand new leg A. It's the same thing. So here's A in the daily. The weekly is only in A. I think you have a tremendous a head start because I would do this. This is one of those because it's given a border, and this candle is a powerful candle. Right here, copper had this candle the other day and then failed. So this is a candle that has succeeded. Why? Because the parameters of the candle of the 29th of July with a high of 25.72 and a low of 19.35 was broken to the upside with a close above the upside 3 days ago. So that says that the rectangle formation has got a much higher base, which should be like a midpoint, and I would put that at about 23. Well, 23 happens to correspond to one of the moving averages, and at the same time, the weekly chart says the way it's acting right now, if it closes above 23, it doesn't have to go underneath, that's not a problem, but if it closes below 23, that's not good. But if it closes next week above 23, all of a sudden there's a real good chance that the stochastic could move to 18 or 19% while the MACD is improving. I think you've got a good entry, and I'm going to suggest, this is a little different to what I normally do. I'm going to suggest that you, just for the moment, you give yourself on your core position, I don't know what you'd be happy with, but I would say a 1.5 point stop in the core position, I would be good with. But in the meantime, I'd stretch the shorter term at 25.23. I'd allow it even to go to 24.50 or 24.30. But that's no more than 2 days. By Wednesday or so, you want to see a new recovery high in the 26.30s to 26.50. If it can do that, I think you've got yourself a stock, SLCA, which has the potential to be one of those 3 to 5 week, just like you saw before, but this one could be a little bit longer. I'm not yet sure if it can be steeper, but it'll be longer. And 30, I know that mentioning the number 30 is very exciting to you, but 30 is the 9-period exponential moving average, which I'm sure you've seen in the monthly chart. I don't want to jump 2 steps ahead when I haven't hit one. The first step is I want the daily to close once at least above 26.30. That would be really nice action. But I think you've got a fabulous entry, and I am going to put it on my list right now. SCA, of course, I don't have a pencil right in front of me, but I'm going to put, give me a, if you don't mind, give me a an email just say SLCA, and I'll keep checking it out. But I think you've got a fabulous entry. You really timed these very nicely for entries and exits. Congratulations.
It's a great stock. I traded it when you were further back on the chart where you said it went up to 40. I traded that as well. It's, when it gets moving, it can make some pretty big moves. So, yeah, I'll certainly send you an email, Basil. And again, thanks so much for your help. You're always, big help. You're very thorough, and just have yourself a great weekend. I'll plan on talking to you soon.
Thank you very much. I appreciate all that, and looking forward to the email and the reminder. So, folks, I'm not sure. I think we're about to go to break in about 2 minutes. So what I want you to do in this remaining time is I want you to grab this. I want you to show you that it had a spectacular move from under 10 back in 2012, and it went all the way to 70-something to a peak D top. So that, to me, is really important information that you need to know. And what I'll do is this. In the remaining time, I want to go through some of the other sectors. Let's go through currencies right now. Look at the dollar, DXY. The dollar, it's really not failing. It's just not, because it's had a spectacular move. I think this is just part of that monthly digestive process. So I'm not expecting the dollar to do very much, but I do expect that if the dollar was to break under 95.50 to the 95 support in the weekly chart, you could see a move down to the 94. It's no big deal. And then we'll see what happens to gold. So I'll be back. Basil Chapman on this 14th day of August. The Dow's up 31, the S&P's up 2. Wow, what an interesting market this is. I'll be back when we talk about some of the things you want to look at over the weekend.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back. And I want to just finish up here. I'm not sure if I've done this correctly. I'm going to do it again. I used to have this notated, so I'm not sure I'm going to have to renotate it. I did real quickly during the break. I was asked in the den. I'm sorry, the den. I haven't been able to get to you today. But I was asked about Estee Lauder trading at 90. What is that, a 90? Is that a 90? No, 88.62, and it's down $1.19. I think I might have a leg F in a monthly. I have to do a little more work on that. But there's certainly a leg D in the weekly, and shown ABC just made a peak D in the daily. So I'd be careful. And some of these stocks, some of these cosmetics, some of the fashion, some of the I'm going to do work on these things over the weekend, because they've had spectacular moves. You've got UA. They're Under Armour, leg E in the monthly, leg G/C in the weekly, and an F, EF, an F in the daily. hasn't yet shown any sign yet in the weekly or the monthly of turning down. There are some spectacular stocks that are still doing very well. Where I've said sector by sector, a rolling correction that started off in November, December of last year, started to pick up steam in February of this year, really picked up steam in May, June, July, in the mid-year, and now we're going to see more downside action as the upside is becoming more and more limited by fewer and fewer stocks. And if you've got the cyclicals being decimated, and then you've got the high beta stocks that we've looked at so often in for instance, the Investors Business Daily top 50, but even the top 20 having problems, I would suggest to you just got to be real careful. I don't think taking some money off is any problem at all. So the market goes up and I'm wrong, or anybody who's looking at the downside is wrong. So you'll make money, but at least you're protected if in fact some of these key support levels start to break. So let me just do this. Dow's up 43 at this point, 17.451. I'm still not sure that all the residual strength has been taken out, so we're going to see what happens next week by Tuesday. If Tuesday the Dow is up at 17,570 to 17,600, we'll have a little bit more steam to the upside as buyers come in and say, oh, what are we looking at? What are you doing? Getting out of the market is ridiculous. It's a fantastic market. But I can tell you this, any move by Tuesday or Wednesday of next week that starts to test the low of 17,100 to 17,000, that's going to be very important. That's number one. So that's the Dow. Let's look at the S&P, because now we've got really different characteristics in many of the charts, even though the notation's pretty much the same. See, the S&P is holding okay, but it's not great now. It's up 3. I would suggest that the support line is very important. So S&P under 2074, somewhere around that 2074, 72 level next week, very negative action. And on the upside, a break above 20, I'd say certainly if you can break this downtrend line of 2098, that's going to be very important on the upside. And the weekly chart, although it's given sell signals in technicals, the actual price is not too bad, but the technicals really are going to, at this point, start to determine a lot. So that's that. Now I want to do one other thing. The QQQCs you spoke about. I don't want to do that. I don't want to do that. I want to do the VIX index. The VIX index right now is trading at 13.49. So on the weekly, it looked, just a couple of days ago, great. Finally, going to get a weekly close above the 200-period moving average of 16.14. No, it's way down. It's at 13.50. I'm going to have some views on the VIX index if I have a chance. I'm not sure about Saturday, but Sunday I'll be doing quite a bit of work. So it'll be Sunday to Monday for my subscribers. I will be talking a lot about factors in the market that are actually, how can I put this, that are so divergent that you need to explain them both in technical terms and fundamental terms, and I'll do my absolute best to try to do that, because this is a bifurcated market in many ways, less so as we've moved on into this week. So folks, have a fantastic weekend. Stay tuned. You've got Nico and Paige coming up, and I will be back Monday. Please take a chance over the weekend. Take some time.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.